Hello viewers, welcome to my channel. I am Hashim Ali Khan here. Presently I am giving the lectures on the subject income tax 2. In this subject the topic going on is capital gain. How to compute the income from capital gain, that's what. So previous last 2-3 videos I have prepared on the provisions of Income Tax Act regarding the taxability of capital gain. So those who have not watched the first video, I suggest you to go to the playlist of my channel, select the subject income tax 2, in that income tax 2 capital gain. So first you must watch the complete provisions regarding the chargeability of tax of capital gain. I have explained in detail regarding how to compute, what is the procedure. Then starting 1 or 2 videos are very important. Without that, directly if you watch this video, you may not be able to completely understand. So I suggest you to watch from beginning till end in sequence. First you watch the first video, then second, then third, like that. Definitely you can get a lot of knowledge from these videos. So before starting, already I have completed 8 main problems on computation of capital gain, income from capital gain. Now I am going to start the next 9th problem. But before 9th problem, I suggest you to have a hard copy of the problems, a printout of all the problems, which I have given in the link under my description. So go to the description, last line you will find the link there. Click the link, get a hard copy printout of the problems, and then watch the video. Definitely you can get a lot of confidence and a lot of knowledge from these videos. So those viewers who are first time on my channel, I suggest you to visit the playlist. I have uploaded a number of subjects videos. Select your subject, select the topic, watch the video, definitely you will get a lot of knowledge. Now next problem is problem number 9. See the 9th problem. Mr. Ram sold a residential house in Mumbai for rupees 36 lakh. This is the consideration received. Mr. X sold a residential house. The cost of acquisition 16 years ago was 8 lakh. Cost inflation index 100. So it is clearly given. We have to find out the indexed cost of acquisition because it is a long-term capital asset. It was purchased more than 16 years ago. Then after 3 months, he purchased a flat for rupees 38 lakh 50,000. So what is the new point in this problem? The SSC Mr. Ram has sold one residential house and purchased another residential house within the stipulated period. Within the stipulated period. So he will get the exemption under section 54. The 54 section says if an SSC sold one residential house and purchased or constructed another residential house within the stipulated period. The period is 1 year before or 2 years after the date of transfer, he should purchase it. Or he should construct the house within 3 years from the date of transfer. Within this period, if the SSC has purchased or constructed a new residential house, he will be allowed exemption under section 54. So here in our problem, the SSC has purchased a flat within 3 months. So he is eligible for exemption under section 54. Selling expenses are 1.5%. Calculate income from capital gain. That's it. This is the problem. Now see carefully. Computation of LTCG of Mr. Ram for the assessment here. Consideration received 36 lakh. He has sold the residential house for rupees 36 lakh. Transfer expenses 1.5%. It is given in the problem 1.5% of 36 lakh 54,000. Net consideration we got. From net consideration we subtract indexed cost of acquisition. So what is the actual cost of acquisition? He has purchased for 8 lakh 16 years ago. And at that time the index number was 100 given in the problem. So how to calculate indexed cost of acquisition? Take the actual cost 8 lakh into current year index 280 divided by index of purchase year 100. So we'll get 22 lakh 40,000. Deduct it, we'll get the capital gain 13 lakh 6,000. From 13 lakh 6,000 we have to deduct the exemption under section 54. Previous problem we have not applied this exemption. This is the first problem. And remember the condition. one residential house should be sold, another residential house should be purchased within the stipulated period. Then exemption under section 54 will be allowed. Then ultimately long-term capital gain. So here exemption completely 13,06,000. The long-term capital gain nil. So how we got this 13,06,000 exemption? I'll give you explain you in working note. First working note. The asset is held by the SSC for more than 2 years because it's a residential house, land and building. For land and building, the period of holding is 2 years. If it is sold before 2 years, it is a short-term capital asset. If it is sold after 2 years, it is a long-term capital asset for land and building. So here more than 2 years, so it is a long-term capital asset. Now exemption under section 54. Now remember, concentrate here because this is the new point. First time we are coming across. The SSC has transferred residential house and purchased another residential house within the stipulated period. Hence, the exemption under section 54 is given to the least of the following two amounts. So exemption is least of the following two amounts. Which are the least of the following two amounts? First, cost of the new house. In the problem, it is given cost of the new house is 38,50,000. The new flat he has purchased for 38,50,000. So first, cost of the new house 38,50,000. Second, capital gain amount. How much is the capital gain amount? 13,06,000. So in these two amounts, whichever is lower, that is the exemption. The lower is 13,06,000. So therefore exemption under section 54, 13,06,000. Take 13,06,000, minus it in long-term capital gain, nil. That's all. This is the completion of problem number 9. Now I am reading out problem number 10. Mr. X sold 10 acres of agricultural land at the rate of rupees 5 lakh per acre. He has sold 10 acres, each acre 5 lakh. So 5 lakh rupees into 10 acres, 50 lakh. The total consideration received 50 lakh, which acquired 14 years ago at rupees 26,000 per acre. Cost inflation index 109. 14 years ago he has purchased. So it's a long-term capital asset. He has purchased for 26,000 per acre. So how many acres he has purchased? 10 acres. So 26,000 into 10, 2,60,000 is the cost of acquisition. After 6 months, he purchased another agricultural land for rupees 40 lakh. Calculate income from capital gain. See, compare the previous problem and this problem. In the previous problem, the SSC sold a residential house and purchased another residential house within the stipulated period. So exemption was given under section 54. Exemption was given under section 54. Now in this problem, the SSC sold one agricultural land and purchased another agricultural land within the stipulated period. Then exemption will be given under section 54B. So residential house 54, agricultural land 54B. The exactly same procedure. How we have given here exemption, same way. The only thing here 54, here 54B. 54 is there for residential house, 54B is there for agricultural land. See, computation of LTCG of Mr. X for the assessment year. Consideration received 50 lakh. 10 acres he has sold. Per acre 5 lakh. 5 lakh into 10, 50 lakh. Transfer expenses. There is no selling expenses given in the problem. Net consideration. Indexed cost of acquisition. He has purchased 14 years ago at 26,000 per acre. So 26,000 into 10, 2,60,000. So 2,60,000 into 280 divided by 109. It is given in the problem. The index number at the time of purchase of agricultural land was 109. So 280 by 109, 6,67,890. This is the indexed cost of acquisition. Now subtract it, you will get capital gain 43,32,110. This is the capital gain. From capital gain, we subtract the exemption under section 54B. Exemption under section 54B, 40 lakh. How we got 40 lakh? I'll explain in the working note. Then long-term capital gain is 3,32,110. Now I'll come to the working note. First of all, the transferred asset agricultural land is held for more than 2 years, so it's a long-term capital asset. Long-term capital asset. Then consideration received, 5 lakh rupees into 10 acres, 50 lakh. Cost of acquisition, 26,000 into 10. He has purchased the land at 26,000 rupees per acre. 10 acres, 2,60,000. So indexed cost of acquisition, 2,60,000 into 280 by 109. The next is exemption under section 54B. The SSC has transferred agricultural land and purchased another agricultural land. So exemption under section 54B is given to the least of the following two amounts, exactly similar to the previous one. The SSC has purchased, sold one agricultural land and within the stipulated period purchased another agricultural land. So exemption under section 54B will be allowed to the least of the following two. First one, cost of the new agricultural land. The cost of the new agricultural land is 40 lakh. Problem with it, yeah, it is given in the problem. And capital gain amount, how much is the capital gain amount? 43,32,110. 43,32,110. In these two amounts, whichever is least will be the exemption. The least amount is 40 lakh. So exemption under section 54B, 40 lakh. So minus deduct 40 lakh, 3,32,110 is the long-term capital gain. That's it. This is the 10th problem. Now I am going to read out the 11th problem. See carefully. Mr. Robert sold his gold ornaments for rupees 8 lakh during the current previous year. So SSC Mr. Robert sold the gold ornaments and received 8 lakh rupees. This is the consideration received. The cost of which was 1,20,000 16 years ago. He has purchased 16 years ago. It's a long-term capital asset. After selling the gold ornaments, within 2 months, he invested in bonds. So he has sold the gold ornaments and within 2 months, he has purchased the bonds of rupees 7 lakh of Unit Tessel Chemicals and Hydropower Limited, Mumbai, which are notified as specified securities under section 54 EC. Income Tax Act has given one section, section 54 EC. In this section says, if a person, if an individual sold land or building or both, has sold the land or building or both and then invested in securities, invested in specified securities. If one of the specified securities are bonds of Unit Tessel Chemicals and Hydropower Limited. This is one of the specified security given under section 54 EC. तो अगर कोई आदमी लैंड बिल्डिंग और बोथ अगर ये बेचा, वो पैसा से सिक्योरिटीज खरीदा. कौन सा सिक्योरिटीज? स्पेसिफाइड सिक्योरिटीज अंडर सेक्शन 54 EC. And one of the specified security given in section 54 EC are bonds of Unit Tessel and Hydropower Limited. अगर ये कंपनी के अगर सिक्योरिटीज खरीदेगा, बॉन्ड्स खरीदेगा, तो उसको exemption मिलेगा, right? And compute the income from capital gain if the selling expense are 1.5% and the cost inflation index in the year of purchase was 100. Very easy problem. The only thing is new provision you have to remember. Computation of LTCG of Mr. Robert for the assessment year 2019-20. Consideration received 8 lakh rupees. The gold ornaments are sold for 8 lakh. Less transfer expenses, 1.5% of 8 lakh, 12,000. Net consideration 7 lakh 88,000. Indexed cost of acquisition. He has purchased the gold ornaments for 1 lakh 20,000. So 1 lakh 20,000 into 280 by 100, 3 lakh 36,000 is the indexed cost of acquisition. Capital gain we got 4 lakh 52,000. Now exemption under section 54 EC, nil. I have not given the exemption under section 54 EC. Why it is nil? In working note I'll explain. So 4,52,000 is the long-term capital gain on sale of gold ornaments. Working note: the asset transferred gold ornaments are held by the SSC for more than 2 years. So it is a long-term capital asset. Now exemption under section 54 EC. Exemption will be given only when land, building or both are sold. So according to section 54 EC, According to section 54 EC, land, building or both. Only if these assets are sold and invested in security, specified security, then only exemption will be given. In our present problem, the SSC has not sold the land, building or both. He has sold the gold ornaments. He has sold the gold ornaments and invested in securities. Exemption will not be given. The exemption under section 54 EC will be nil. अगर लैंड, बिल्डिंग और बोथ अगर इसमें से कोई चीज बेचता और इन्वेस्ट करता तो उसको एग्जम्पशन मिलता था, अब उसको नहीं मिलेगा. So here exemption will be given only when land, building or both are sold. The SSC has sold gold ornaments and purchased bonds, so exemption cannot be given. Exemption under section 54 EC is nil. That's all. So this is the end of problem number 11. Come on viewers, now we'll start the next problem, that is problem number 12. See the 12th problem. During the previous year relevant to the current assessment year, Mr. Quick purchased a house for rupees 4,20,000 and after 12 months he sold the same for 4,80,000. That means the SSC Mr. Quick has purchased a house, and after purchasing the house, after 12 months he sold it. That means it will become a short-term capital asset, because for land and building the period of holding is 2 years. If an SSC sells land and building within 2 years, before 2 years, that means it will be considered as short-term capital asset. So this is the first problem where we are coming across, where the SSC is selling the asset within 2 years. So the gain arising will be short-term capital gain. And he sold the same for rupees 4,80,000. Brokerage paid to purchase the house 10,000 and to sell the house 18,000. Brokerage paid. The brokerage is paid at the time of selling the house. That will become a transfer expenses or selling expenses. And brokerage paid to purchase the house will be a part of cost of acquisition. It will be treated as a part of cost of acquisition. So very simple problem. Computation of income from capital gain of Mr. Quick for the assessment year 1920. Consideration received 4,80,000. This is the sale price. From this we subtract transfer expenses. These are the brokerage paid for selling the house, 18,000. So net consideration 4,62,000 less cost of acquisition. In cost of acquisition we include the brokerage paid to purchase the house. The purchase cost is 4,20,000 and the brokerage paid to purchase the house 10,000. So 4,30,000 is the cost of acquisition. Deduct cost of acquisition will get short-term capital gain. One point you remember, indexation provision will not be applied because it's a short-term capital gain. So indexing will be done only when it is a long-term capital asset. When it is a long-term capital gain, then only we calculate indexed cost of acquisition. Right now, no indexing. Directly we take cost of acquisition. The short-term capital gain is 32,000. Now, the asset is held by the SSC for less than 2 years. So it's a short-term capital asset. And the gain arising on its sale is a short-term capital gain. And brokerage paid. Brokerage paid to purchase the house will be added to the cost of acquisition. And brokerage paid to sell the house is a transfer expenses. That's all. This is the end of problem number 12. Now see the problem number 13. Sri Deepak purchased a machinery for business purpose whose written down value at the beginning of the previous year is 17,25,000. So here a machinery was purchased which is used in the business, and remember machinery is a depreciable asset. The written down value of the machinery is 17,25,000. During the previous year it is sold for 21,40,000 and selling expense are 11,200. The previous theory video I have explained you, if a depreciable asset is used in the business and sold during the previous year, the gain arising will be short-term capital gain irrespective of the period of holding, right? So here machinery is a depreciable asset, so whatever gain arising will be treated as a short-term capital gain. Calculate capital gain and tax liability if there is no other income. So not only tax liability but also we have to calculate the tax liability along with capital gain. Computation of income from capital gain of Sri Deepak for the assessment year. Consideration received, sale price of the machinery 21,40,000. Transfer expenses, selling expenses 11,200. Net consideration we got. Cost of acquisition. The cost of acquisition will be the WDV, written down value of the machinery. So WDV of the machinery is 17,25,000. The short term capital gain is 4,03,800. The first part we have completed, we have calculated the short term capital gain. Now we have to calculate the tax liability. SSC does not have any other income. So the SSC is having only short term capital gain. On short term capital gain, we apply slab system. Slab system we apply. The first slab is 2,50,000. The income is 2,50,000. From 1 rupee to 2,50,000. So 2,50,000 is the first slab on which the income is nil. Rate is nil, income is nil. The second slab goes from 2,50,001 to 5 lakh. 2,50,001 rupee to 5 lakh. Second slab. But our income is not reaching 5 lakh. Our income is only 4,03,800. It is below the 5 lakh. That's why I am taking balance. I am taking the balance. So 4,03,800 minus 2,50,000. 1,53,800. This is the balance on which the tax rate is 5%. So 5% of 153,800, 7,690. So 7,690 is the tax on total income. So 7,690 add health and education cess 4%. You add up 308. So tax liability will be 7,998. If you round it off, it will become 8,000. So tax liability will be 8,000. That's all. So complete it, the solution. Now working note. Transferred assets are used in the business and subject to depreciation. Hence, profit arising on its sale is a short-term capital gain and taxed on slab system. Just now I have explained. If an asset is used in the business, which is a depreciable asset, so gain arising will always be short-term. We should not see what is the period of holding. And for short-term capital gain, slab system of tax will apply. Next problem is problem number 14. See the 14th problem. Mr. Alim is a film producer. During the previous year, he sold a film projector for rupees 3,40,000, which had cost him 3 lakh, in respect of which 80,000 had been allowed as depreciation during the last 2 years. So actually the SSC has purchased a film projector. It's a machine. So film projector he has purchased last 2 years back for 3 lakh. And during the last 2 years, depreciation was provided 80,000. The written down value or book value of the projector is 3 lakh minus 80,000. So 2,20,000. So 2,20,000 is the written down value or book value of the projector. It is sold during the year for 3,40,000. And expenses on sale amounted to 10,000. These are the selling expenses, transfer expense. Calculate income from capital gain. Now, if film projector will be treated as an equipment, machinery, which is a depreciable. So any gain arising on the sale of machinery is a short-term capital gain, irrespective of the period of holding. Now see, computation of income from capital gain of Mr. Alim for the assessment year 1920. Consideration received 3,40,000. Sale proceeds less transfer expenses 10,000. So net consideration 3,30,000. From this we deduct the written down value WDV. So written down value 3 lakh rupees minus 80,000, 2,20,000. So actually short term capital gain is 1,10,000. SSC sold a film projector which can be considered as a part of plant and equipment, which is a depreciable asset. Hence the gain arising on its sale is considered as short term capital gain. That's all. This is the end of problem number 14.